Wholesale and buy and holds are not the same business, so why are you tracking them the same way? Lots of people try and just put everything into one big pot and say, here's what I'm doing for an exit strategy for wholesale. Maybe they might even throw fix and flip. They might throw the buy and hold. They might throw all these different exit strategies all in, and they're just tracking them all the same way. And I'm talking specifically when it comes to your numbers and your finances, where let's just say you have an account, like a QuickBooks account, and you're having a bookkeeper or someone put all the data in there, and you've got wholesales, you've got buy and holds all in there. How do you really know what's happening? How do you know what your wholesales are doing? How do you know what your buy and holds are doing? How do you know if you're really making money on the wholesale side? How do you really know if the buy and holds are bringing you the cash flow that you really think you want from each buy and holder, from each rental? So that's where you cannot just all lump it up into the same bucket. Couple reasons. Number one, I would say it's very dangerous to track buy and holds and wholesale deals, especially in the same financial software account. Like you could have QuickBooks and an entity for wholesale and then a different login or a different account for the buy and holds or a different subscription, whether it's QuickBooks or whether it's Xero or all the other financial softwares out there. But the number one biggest thing that will kill you is, what if you have buy and holds and wholesales and someone slips at your buy and holds and you get sued? If they sue you and you have them all in one place, they're also going to be able to see your wholesale deals, which if this is your ATM and your real money maker, and this is more the long-term wealth building, getting you out of the rat race, like you do not want them seeing the big money maker side as well. So that's like number one, it's a liability. It's a really big risk that you're taking if you're lumping them all together. Number two is if you're lumping them together and you cannot clearly see what's my wholesale company making versus buy and holds, because those are two wildly different businesses. Like buy and hold, you're trying to get out of the rat race. Usually you're trying to either build equity. Maybe one day you transfer all that equity into a big apartment building. Maybe whatever it is on this side usually is the financial freedom side, where wholesale is more of the ATM. Fix and flip wholesale, if you're selling that property, that's more of the cash hit to be able to keep your business going. So if you're tracking in the same way, number one, usually, or as we're going down this road, I see people from all walks of life here where they're doing both things. They're doing wholesale, they're doing fix and flip, they're doing the buy and hold. If you're tracking them the same way, then you might not know where you're leaking money. There was one guy that we worked with, he had a fix and flip, doing a couple wholesales, and then he was doing buy and holds. Well, he didn't have anything separated out. He was tracking it all in one place, but he knew like something is off this year. I feel like we're doing lots of deals where we're selling them, but I don't have a bunch of cash piled up. So when we dove into it, he was robbing from Peter to pay Paul. His portfolio of rentals and all the cash flow was basically feeding the fix and flip selling machine, that wholesale fix and flip machine. And that's where a lot of people get entangled. They're like, well, I'm building this portfolio over here and I'm building the sell side to be able to go out and sell a lot and be able to get all the cash. But if you don't know the bottom lines of both exit strategies, even if they're in the same LLC or they're in the same company, if you don't know the difference and what is the bottom line, then you're just going to keep running like that one guy. And honestly, at the end of that year, that calendar year, he came to us the year after that was happening, where he wasn't tracking them in two different ways. He had lost $70,000 in the fix and flip, and literally all the rentals were just covering that loss. That's where the robbing Peter, to put actual dollar amounts to it, he lost $70,000 in that fix and flip / wholesaling company. And that's where just, he didn't know. He didn't know how much was coming in, how much was going out. So for either business, that's where I would start. Number one, separate them out, but then knowing what's coming in, what's going out, what do you get to keep? I call these the easiest numbers to track as a business owner. What do you make, spend, and keep? Now, those would be, but I would do them individually. I would know from wholesale or fix and flip, like, what am I truly making over here? What am I spending? What do I get to keep? And then does my portfolio get to stand on its own? How much am I really making? Now, on the on the buy and hold side, it can be trickier to know what you're really making, because if you know the profit and loss and balance sheet, some of the expenses for a rental sit on both financial statements. And if you're like, wow, I didn't even know that, or there's no way, I've never even dove into this, but that's the truth. If you have a portfolio of buy and holds, the expenses there sit on two different statements, and you say, well, what does that matter? Well, on the profit and loss, usually you're looking at that bottom line number. How much did I make in net profit? And that's where you say, okay, I don't have that in my account, or where's all that money? Well, because some of the expenses sit on the balance sheet and not on the profit and loss, it looks like you might make more than what's the actual cash in your bank account. And that's where just knowing that and having that understanding can help you open up on the portfolio side, on the buy and hold, to be able to track better, to know what's the actual cash. This is why I'm such a profit first fan, and knowing and implementing profit first, because if you have a system for your cash, which is profit first, if you've never heard of that, it's a cash flow system. It's knowing where every dollar is going. It's like the envelope method on steroids for business owners, where you set up business checking accounts, and those checking accounts are helping you know exactly where every dollar is going, and they're named certain things like profit, like owner's comp, like taxes, like the income and expenses, so you know what's coming in and what's going out. So for your buy and holds, I would have those core accounts and knowing where every dollar is going, but then also understanding how much are we really making from these buy and holds. Like, okay, let's just say rent's $1,000. Well, what's your principal, interest, taxes, and insurance? Because $1,000 is not how much you're really making. How much you're really making is after your debt service and what you have to pay there. Maybe you're clearing $300. That's what you're really making in cash flow. But then if you have an expense on the portfolio side, how much are you really making if you're just the 300 minus whatever it is for that repair? This is why having a cash system will really help on the buy and hold side a ton, because it will tell you very clearly how much are you keeping from each rental and how much are you really making from each rental as well. Then on the fix and flip or the selling side, it's understanding, okay, you can still have the same system, make, spend, and keep, but over here, you're really a marketing machine. You're trying to get leads and deals in the door, and especially if you're wholesaling, then you're just turning around to a buyer and trying to sell that deal. Well, if you have profit first set up, it's the same thing, only it's going to help you understand how much did I really get to keep from these wholesale deals. Like, I made, let's just say $25,000 on a deal. What did you do with that $25,000? Are you tracking that? Do you know what you did with that 25? Did you just put it all back into the business and that's why you don't see any of it, and why your portfolio maybe has to cover your wholesale company? This is where having a profit first system, even on the wholesale side, will help you understand. I made $25K. Where does every dollar need to go for me in order to know I'm keeping more of what I'm making? I'm able to pay myself. I have the taxes available at tax time if you're going to pay taxes. But this is where you need to be able to track that on the wholesale. Another big thing, this would be not on the profit first side, but more on what should I be tracking, like wholesale versus the buy and hold. Well, number one over here is that cash flow, and like, how much am I actually making? But then wholesale would be, how much am I spending to get a lead and deal in the door versus how much am I actually making from that lead source? Like, this is because on the wholesale side, that is a marketing business. You are trying to get leads and deals, and then you're just trying to sell the paper to someone to be able to close that deal. And so that way you're just trying to see, for the dollars that I spend, how much of a return am I getting? On this side, on the buy and hold, you might be able to track a few different things, because it's not just about how much of the cash flow you're getting, but like, what equity did you also acquire as well too? And do you want to pay down good debt and you want a free and clear portfolio? It's like that you have lots of things that you could track, but what's important to you? Do you want a free and clear portfolio? I would know then, what's my loan to value for my entire portfolio? Do you know how much loans you have versus how much equity you have in the properties? So that way one day you wake up and you've been paying down all the equity, so that way you've built up a huge equity pile there. Maybe you have a free and clear portfolio. Then you're able to cash flow more, and it helps everything else. Where on the wholesale side, that's hard to build a business that's going to get you out of the rat race unless you build a machine. But I have not seen a lot of people build that wholesale machine that's able to be sellable. So this is usually the cash monster that is helping you acquire cash on the wholesale side to be able to invest in the buy and hold side, to be able to build that equity, build a portfolio, build the business end of the business. But if you're just reinvesting every dollar from the wholesale back into your business and there's no clear plan, then you won't understand and ever be able to get out of the rat race, because the same habits that are keeping you wholesaling and not knowing where the money's going also won't help you on the buy and hold side to get out of the actual rat race and know where to put that passive income. So this is where I would have those be the things that you're tracking. For wholesale, it's really about the marketing and the lead flow and the lead gen and knowing the returns on investment. Over here, it's usually about that return on equity and knowing, am I building the equity in here? Am I going to go out and 1031 exchange it and be able to roll into a bigger property? Playing Monopoly over here on the buy and hold side, where you've got 4 green houses equals 1 red hotel. Like, is that what you want to do? Or do you want to pay everything off and just have a free and clear portfolio? So those would be the things that I'd be tracking differently. But at the end of the day, you want out of the rat race. So the wholesale company or the buy and hold, whatever gets you to what that means for you faster. So that usually is either a dollar amount that you want saved up or amount of income that you get, where even if you didn't do a wholesale deal, how much passive income would you need from your rental portfolio? How many does that mean? How much do you need? And depending on your cash flow, like how many properties do you need to acquire and how big does the portfolio need to be? So those are the differences, because one is a cash company where you're just trying to acquire cash. The other one is more about the long term, the buy and hold, the equity. Probably you're trying to get out of the rat race with the buy and holds, or at least get into bigger, maybe multifamily commercial. So that's where I would start the tracking, and that's the difference between wholesale and the buy and hold. Thanks for spending time with me today. If this episode gave you clarity or a new perspective, be sure to like, subscribe, and comment below. If you're ready to apply what we talked about today with real guidance and accountability, visit profitrei.com to schedule a free discovery call with us to create your path to financial clarity and freedom.